shift a little bit here, I just want to speak to what some of the risks or concerns to a potential investor would be, because whenever I'm out there and I'm talking to investors and I explain that, well, you can invest into a MIC, it's a mortgage investment corporation, and they lend money out to various borrowers who may not have qualified at the bank. And somebody will immediately say, whoa, time out. If this person didn't qualify for a mortgage at the bank, why would I want to be part of a pool of capital that's lending? Wouldn't that be risky? Can you speak to that a little bit? Because I think that's a bit of a myth or misunderstood.
It is. And, I think that people, when they start to understand who the borrower is that comes to an AP Capital MIC, it's not who they initially sort of estimated it might be. There's many different types of Canadians, but when it comes to financial Canadians, there's Canadians that have income from their job. And let's say they work in a job with, 6-figure income and it's consistent and they got a T4 slip that, is year over year, consistent. That is who the banks and large, credit unions and finance companies and so on are mostly conditioned for. There's another type of Canadian that maybe doesn't have consistent income. They maybe have high net worth. They maybe have corporate income and some personal. They're working with their accountant to determine how much they should show from a personal perspective, because really their business income is one that allows them to, have that distribution of income to corporate versus personal. Sometimes they have lumpy income. One year they have a lot, next year they have very little. And just because of the nature of the business or the way in which they earn their income. So those types of Canadians actually find it quite challenging to work with our conventional banking system. And so with that comes the opportunity for lenders like us to provide them with a solution. And sometimes the higher interest rate is far less expensive to them than some of the other tax planning that they might go through with their accountant. Another one, which I think is one to be considerate of, is that, if there's people that are locked into a fixed 5-year term mortgage, and to break that 5-year term mortgage has high interest penalties. And so even if they have consistent income and they're kind of a bank customer, they might have gotten themselves into that fixed 5-year mortgage, and now they want to maybe refinance or gain access to help their kids with a down payment or expand their business or pay out a spouse if they're going through a divorce. There's all these different scenarios where somebody might need access to the equity in their home. And sometimes they're in a situation where they're actually in a better position to borrow from a lender like AP Capital than they would be to break the fixed term mortgage that they already have with their conventional bank. And then at some point, a year, maybe sometimes 2 years later, they can refinance with their conventional lender and be back on track. So really, the AP Capital solution to people is a short-term one. We're not there to help somebody pay off their home for 25 years. We're that short-term, interim sort of bridge financing solution to them.